The rand, now trading at over 11 to the dollar and close to 18 rand against a pound, is at its worst level in 5 years.
The rand's primarily being driven by what's going on in emerging markets. So the domestic issues are a negative backdrop to that, but certainly aren't a major driver at all. In fact, we at RMB have gone away and looked at what's been going on in some of these other emerging markets, and their domestic problems are much, much larger than what we have in South Africa.
South Africa's finance minister believes there's no need to panic, as a weaker rand is welcome news for exporters. This could help offset South Africa's massive bill on imports and narrow the country's current account deficit.
We should be importing less, but that isn't happening, unfortunately. Our current account deficit, our trade deficit, is still very, very wide, and I think that will persist unless and until our exporters particularly can convince people in the developed world that we can supply on a sustained basis globally competitively priced goods.
But manufacturing output remains under pressure in South Africa. Government believes it's a good time to ramp up production. However, key export sectors like mining and fruit are struggling with labour unrest.
So it's catching a lot of negatives over and above just the general wave of poor sentiment. And to that I ascribe things like the idiosyncrasies that we currently have, things like shooting ourselves in the foot with strikes, with political violence, that type of thing. And of course in the lead up to an election, I think that will also serve to help to weaken the rand.
In the meantime, the weaker rand will soon hit consumers that are already under strain from rising costs. The weaker rand may be good news for exporters, but not for consumers. The impact of the weakening rand will soon filter through into the prices of fuel and food, adding more inflationary pressure on the economy. The ongoing labour unrest is making investors nervous. The IMF and the UN's economic unit have also raised their concerns about rising unemployment.
Continued rand weakness would force the Reserve Bank to hike interest rates. We don't think it's going to happen this week, but eventually the Reserve Bank might have to hike interest rates, which would dampen consumer spending and investment spending, and so push GDP growth lower.
The rand is unlikely to make a quick recovery. Experts believe the currency can be beneficial at this level only if all sectors of the economy work at optimal levels. Sumitra Nadu, CCTV, Johannesburg.